23rd, 2026. Before we get underway, the regulators require that we display the risk disclaimers associated with trading. You all know about those. You can find them under the NFA compliance rule 2-29C subparagraph 1. And basically it states that past performance is not indicative of future results, and trade with money you can afford to lose. All right, let's start off today where we essentially left off yesterday with our morning briefing. This is the same chart we had up yesterday. And we had highlighted, of course, yesterday was a cycle day 1. And the low was established early. We did get the rally up to the key zone that we outlined as well, up there near to the 50, 60, 70 area. And again, found resistance. And then just we got a pullback yesterday, closed near to the 75 41s. And then here in the overnight, we got a little bounce up, a test of it up to the 50s once again. So again, when we think about this, right, even coming in on from a Globex session, right, we have our high, and of course, when you come in this morning, we have a lower high. And then what you want to do, and again, this is something that I do every day. Again, I'm highlighting where those, key reference uh, intersession lows are and highs. So when I look at the overnight session, right, again, I'm looking at this, and we took out, this low here, somewhere around to the 15s, 13s, 15s, which was one of our targets yesterday, if you recall. And then, of course, this is the cycle day 1 low over here where I've highlighted. So here in the overnight, they tested that low, did get a reaction, but as you can see, that did not really last too long, created some sort of a bear flag condition. And then the second touch of the cycle day 1 low. So first touch, typically we get a reaction. And in fact, that's what happened there during the overnight. Subsequent tests are subject to failures. They don't always fail, but they're subject to them. Of course, here in the overnight, that in fact what happened. And as you can see here, all right, we're down here into the lows. And if you recall yesterday, again, I highlighted this 70, 90 area as a big defensive zone for the bulls. And the reason for that is that the market has been, for many tests over the past week or so, been responding from those levels. So it's at some point, one of the sides, one of the edges, one of those zones is bound to break. Perhaps the overnight, increase in tensions overseas are adding to that. Of course, we had some tech earnings, and we have, that came out yesterday, Google, Tesla, that could, again, have some influence. We're going to be, we're into this earnings season period. So whether or not this is just a kind of probe lower or not, for another new, buy the F and dip type opportunity is yet to be seen. But it appears, anyways, the way the market is reacting, at least early. And again, the ECB today, Lagarde is speaking, and there's a lot going on, that could influence, price action. And again, pick and choose which one. I don't necessarily, highlight any particular event, but rather, the combination of everything. kind of weighing on the market. I'm actually surprised, to be honest with you, that the market's held up this well this long. But again, we follow what the market is telling us, not what we think it should be doing, right? And that's how we thrive in this environment, right? Again, always staying on side of dominant force, seeing where prices, respond, where they're supported, where they're resisted, right? Where they fail. All those things kind of, go into the mix, right? All right, so here we are on a cycle day two. Of course, we are below the cycle day one low. And so we'll see how this plays out. Typically, my favorite type of play regarding the cycle is this type of scenario that is unfolding today, which means prices have moved well below the cycle day one low into actually uh, low areas, range areas. And again, this could present an opportunity. Again, not a suggestion. I can't here suggest any trades for anybody. Since I'm not your advisor, I'm just an educator and a trader. But that said, I like to look for weakness on a cycle day two and to play the odds for a 3-day cycle statistic, which currently is 93.18 or something like that, meaning that the price is back above the cycle day one low on cycle day three tomorrow. So we'll see. Stranger things that have happened. Markets have seemingly appeared to be collapsing in the past on a cycle day two, and then lo and behold, it recovers the cycle day one low. Crazy as it seems, but we've seen those things in the past. Again, past performance, past occurrences have no direct bearing on what we is happening today. All right, but we are at least aware of it, mindful of it, and it could be something that we could consider at some point throughout the session. But for the now, beginning the session, again, we have this weakness coming in. Now, what I've done here on our charts, this is our uh, D-level money box zone, right? You'll see these green zones here that you, right, and these yellow lines. So this is today's right up here. Okay, now today's zones have been violated, meaning traded through below. So they've been violated. So though they're still valid, should we get some sort of recovery play, but for now they're out of play. Okay. Now, previous days, what we also have historicals. So this is today's, and then you can see these green zones here, okay, etc., up to the upside and to the downside. So these are the historical ones. Now, I've been questioned many times about these, and question is, are they still valid? And the answer is yes, they are still valid. Much of what I like to do um, for these is use them as kind of extension areas, right? So again, you can see, for instance, today, is pushing down into these areas here. So, we could take, I would do something like this just to demonstrate. I would take starting here, and I would just put a larger rectangle to cover these 3 previous days. Okay, so and that's still a pretty wide swath of range. Okay, between around the 55s down to the 35s or so. So you got about 20 handles in here. But the idea here is this still is what I would certainly consider an important zone for the market to find potentially some, responsive buying by the F and dip type of players. Okay. So we're going to be at least, be aware of that. But But the point is, we want to be aware. We don't want to just be. I mean, we want to stay in alignment as always. And what's the lean coming into today? Certainly, it's to the sell side. And again, we'll have to monitor how that plays out. But I would not be surprised in any way that somewhere within the zone, the market finally, finds some solid, buying response. Okay. We do have a projection low down here, as you can see, um, down to the 48s. Now, I've noticed on some of the postings out there that people have, they've, kind of this 74.50-ish area has seemingly been an important level for whatever reason. They're posting those things, but it's good to see what other folks are in terms of Rich handle stats work. And he comes on Fridays. Okay, I believe, if I'm not mistaken, 74.46, which pretty much matches up with this projection low here. 74.46 is a 2 sigma event on his work. Okay, so again, that is going to be perhaps, certainly a test here today. We're already at the 50s. All right, so that's the lay of the land coming in. I don't have an opening position at the moment. Did have a position earlier on a short coming in off the overnight, but that's it. That one's been closed. All right. Any questions, comments? Feel free to, as always. All right. So we'll see how this plays out for us today. All right. No predictions, just all preparation. Hopefully, we don't need preparation H, but we are prepared. Right. And again, in these kind of downdrafts, don't be a hero. Just let the market, again, play your game. Follow your strategy, follow your setups, etc. But don't try to, catch falling knives or anything like that. Uh, there's plenty of opportunity without catching the, it's always nice to, oh, I caught that low and we got a big reversal. That's a tough game to play. So just be cautious as always, and we'll get underway in just a moment or two. And again, feel free to, chime in on what you guys are looking at. That always helps the engagement and conversation. I have my particular view. Everybody else, has, their own view, and feel free to join in with that. Uh, Again, open conversation and viewpoints is very much welcome. All right. I did not get Manny's levels, so I have no idea what he's looking for today. He typically posts those, but he is in Tennessee. Yes. One of the things we can do with our D-level money box as we begin here is I can set this to uh, look for tomorrow's sessions, tomorrow's levels today. So that's another way we can utilize these. Again, that's dynamic. Those are dynamic levels, but that's something that we can use. Anyways, coming down into this 50, 47, 46 area. And again, that's that 2 sigma event that Rich Handle Stats has. on his sheet. So we're gonna see how market responds in that area, and away we go. It does feel like a liquidation event. Uh, Hopefully, I'm wrong, but it does certainly feel like a liquidation event unfolding. These are not just shorts. Short traders can certainly add to the momentum, but uh, this type of activity is clearly footprints of long selling, long liquidation. Okay, so how far that goes, we'll see. I don't have necessarily estimate. All right, thank you, Terry. Terry's posting up some levels that Manny sent out. All right, very nice. Thank you, Terry, for that input. So what's the one down is? He have something there, 45s? Yeah, so he has right here 45s. Okay, so mark that off. Again, that's one of Manny's levels. Manny has some pretty good levels, no question. So he has around 45s in here. All right, so if you're kind of following, Manny's outline, what he has, again, he has 45s in here. And again, that's also, again, all this matches up with what we have as well, right? The buy day, the projection here at 48s, and we got rich handle stats 46s on a 2 sigma event. So even if you don't take a trade, right? Think about it, right? A lots of non-correlated levels from different angles. Market pays attention to a lot of that stuff. Yep, support first, resistance second. Absolutely. Oh, is it support first? Yeah, support at 45. No, oh, I see. I see. I'm reading him upside down there, Terry. I got you. Well, in any event, we have the 45s down here at the lows, and we again in our area of 2 sigma. So maybe this will be a more important low early on. We shall see. Yeah. All right. So again, these levels here, again, just make note of them, right? We were looking for some sort of response back in this area, and just note that we talked, and again, it's been as part of the analysis, right? Again, taking a probe there is certainly, a play, or if we want to look for a first pullback here following that move, right? So maybe we get a dip back down and get an opportunity for a long play. Again, I'm going to stay flexible today on both sides. And again, I'm always flexible daily, but just to, one thing I like to do is I come in each morning during during the prep, and I kind of in my mind, I set my intentions, right? What am I setting out to do today? Yeah, make money, et cetera, et cetera. That's really in the background. But what's my intention? You know, set your intention, be specific. I'm looking to better myself in this area or in that area, right? Be specific. I know people talk about affirmations. I'm not an affirmation person. I'm an intention person. So set an intention, be specific, very specific, as a matter of fact, and then work on that throughout the day. If you've never tried it, try it and continue to try it. Okay. I think at this stage, at the moment, being flexible, I think we're going to just turn to the buy side. All right, lean for the time being, and partly the reason for that is again the way we kind of handle things is again we got that drill down here. I'm not looking to short it down into those areas. No way, no how. Right. Let the market. Again, I've always suggested let the market show us what it wants to do first, right, and then we'll go along. So we do have a shift here, as you can see, all right, that occurred. So now we're on the buy side of this swing anyways, right? So we're not running after it, right? Wait for it. Look where kind of identify where the shifts occurred. So roughly around the 60s there, plus or minus, right? So we can outline some levels, frame out some levels so we can perhaps probe. Right, let the market give us its levels, and then we can use what the market is giving us. So right now, of course, call it the 50s, 45s, 50s, and roughly right now 75s, 80s early. Okay. And we do have our ATAs enabled. So if we get using the ATAs the way we have them set up anyways, and again, it certainly assists us, with even the emotional aspect of trading, right? Helps us keep grounded. And may I be bold to outline the initial sandbox. So let me just post this. And I'm going to be somewhat loose about it. Okay, so the way I'm looking at it at the moment, it certainly will change. The initial sandbox, as what we call it, 74, 75, 50, up through 74, 75, 80. Again, that could certainly change, and I'm sure it will. But for now, and then the current lean will be long on the dips. Right? But stay flexible. Didn't really get a good pullback there. Jeepers, creepers. I was looking for a little bit of a pullback there, deeper than that, but market's going to do what it wants to do. Okay, so what's happening here is prices are coming back into this money box zone that we outlined earlier. Okay, on the left. So be mindful of could be some resistance here, but be mindful if it holds in this area, this could be a reclamation area for higher. But again, at this stage, be careful. Again, we're coming up to VWAP. Typically, VWAP should offer us a little bit of a stopping point here, coming off a deep low like that. So just bear that in mind if you're playing D-level money box reclamations. What I like about these type of breaks is that it opens up the playing field. Volatility increases there, right? Movement, swings, magnitude of the swings. So it provides us with some opportunity. Okay, 85 short for Manny's level. Great. So that's support turning resistance, right, Terry? Is that how that works for him? Okay, good. All right. Well, that matches nicely with our 80 zone sandbox. Now, our A10 has struggled the past few days, clearly. Maybe today we get a little bit better response from it. We'll see. The A10 long is somewhere around the 66s. All right, so keep a watchful eye there if that leads to some sort of a response. All right, here we are at the A10. Did trigger. We'll see if it works for us. So again, A10 long here. We'll see if this works. Come on, Seabiscuit. Not struggling. Yeah. No dice yet. No dice. That strategy this week continues to struggle. All right, we are getting that pullback here again. Again, look for the 60s. I mentioned the 60s earlier. Let's see if that's kind of where the market started accelerating from off the low. Again, if they want to reaccelerate it, that would be a good area. John snagged the BLT. Excellent, John. Right from 72.75. Very nice. Kind of figured you would. What John is talking about, everyone, again, is this discount signal. Typically, that's a long, right? Using it as a short. So a short sell on a break of that signal line there. Very nice, John. You also had some I mean, it was really nice because you had negative bid-ask volume ratio, of course, momentum there as well. All right, so that was a nice trade. That's John's favorite trade. The Chilean connection. You know, it's interesting about doing things like that, right? Just kind of thinking about it. You can actually just simply place a bracket order, right? Most of our trades, anyways, are bracket orders, right? A buy stop, right, and a sell stop. You just put a bracket order, so whichever one triggers, or but if you're leaning one direction, you just still place a bracket order, and then just let it trigger you in. Very nice. Terry, did you catch that short? Did you short them there from the 85s? That was a good area. Again, I had the 80s. Okay, super. Right. Very nice. All right, here are those 60s. Let's see if there's some sort of a response here. Again, I don't have a core trade at the moment, just outlining the price points. All right, so the upper edge of our sandbox, 74, 75, 80, is valid. Since we did get a reversal off of that. So that means a valid zone. That remains a valid zone for the bulls now to reclaim. All right, so the bears are going to use that heavy duty. Yeah. All right, they're getting a little bit of response off the 60s. Again, simply the reason why I selected that area is this is where it changed direction right there. Okay, where that star is. So you just carry that forward. I mean, reading price sometimes is not that difficult in that we're looking for what I like to look for the where the thing where price changes. Okay, and you can clearly see right around the 60s. That's where price changed from down to up. So then you get a retest, right? Call that the breakout if you want, right? But you typically get a retest. So again, whatever I'm saying, if you want to, certainly it's not advice. None of this is financial advice, trading advice. But if you do follow, my commentaries and direction, again, even just identifying areas, you could just probe something in there and see what happens with it. I think I'm pretty good with identifying levels actively, but that's how I do that. I mean, it's just basically where did price change, and then price typically will come back to that area, and then you're looking for, you know, again, the requisite response from that first response. So you get the secondary response. So now we have somewhat of a range kind of being built here, right? Our sandbox, I think, outlined pretty well: 45.50, 75.80. We'll keep that as the valid sandbox here at the first 30-minute mark. Now, keep in mind, we got 30 minutes. We got the Delphine trade. All right, Delphine's with us today. We have the Delphine trade, which is our uh, call it 10:05, 10:10 trade, potential reversal. We'll see if that plays out. Played out beautifully yesterday. We'll see if we get some sort of similar reaction to that today. And again, if you're in any of these trades, just, it's a trade, right? We're not going home. We're not bringing them home to mama, right? Speed dating. Love them or leave them, right? John says he has the 10:05 alarm on his cell phone for Delphine's trade. There you go. All right, very good. Okay, very good. All right, let's see what happens here. All right, potential retest of the lows here on deck. I get a high volume node right there at 52, 53s. Just at this point, just trying to find markers, right? Just trying to find levels and markers that we can use to kind of hope, lay a hat on a little bit. I just got Manny's email on the blueprint. A little tardy, but All right, so again, that 53, the line, it's just I'm marking that off just as a high volume node, as a quick reference. Get another high volume node up at 73 or 76 rather. So yeah, 76. So mark kind of that. All this does for me, it helps frame out. You can see above 76, the volume kind of drifted lower. Same thing below those 53s, very little volume relative. So it's kind of just trying to tighten up the sandbox a little bit. All right, just tighten up the sandbox a little bit. So Delphine says when we have no reaction between 10:08 and 10:12, all right, we wait for the next window, which is 10:35:45 for the twist and turn. All right, thanks. Yeah, we also have 10:35:45 on our sheets, on our time sheets. All right, so first 30 minutes is out of the way, and we're going to see if Delphine's zone works here for us today. Don't worry, Delphine, no pressure on you. All right, so just hanging out right here. It's in the middle here of this zone. Swings are calming down. Get a lot of two-sided trade now and unfolding. All right, so the markers that I put out there, 53s, 73s, again, those are kind of 77s or 76s. Those will be um, kind of our references for uh, price to shift higher or lower. Again, as you can see, it's pretty boxy in terms of volume here, very heavy two-sided action here. So they found a place where both the bulls and bears can play. Yeah, we're all watching. Here we go. 10:08. So the reaction, what we're looking for would be the one up to the upside, right? Or a reaction. Does it matter? Usually reversal, so might not be as robust today. Yesterday was great because it was up at the upper edge. Today maybe not as crisp. Today could retest the low. Yeah, I do think there's high potential to retest the 45s again. Yeah, absolutely. Maybe even dip down below that. They like to do that, you know. Yeah, I'm still favoring the kind of long liquidation theme, right? Maybe not the whole day, but certainly the morning session here just really senses a bit more of the long liquidation. Of course, it's going to find areas where buyers will step in, but I mean, the initial downdraft, those, like I said, those were not short sellers. Some of them, I would course jump on board, but that's a long liquidation break. Yeah. So this is what we do. All right. This is how what we like to do. If I could do it on this chart. What we like to do is we use our dynamic D-level money box tool. Okay, here. So basically, what I'm doing here is I'm just measuring Well, that doesn't work anymore. I'm measuring from the low to the high, and then these are the extension boxes. Let me outline them. So this would be the extension boxes we're looking for, right? For a look below and fail. We call that a peekaboo, PKB. Okay, so those are the areas, zones we'd be looking for a buy response below the lows. So if you like playing the look below and fails or PKBs, aka PKBs, those are the ones, and that's a dynamic one because we're measuring it out now. All right, so just hanging out in this area for the time being. And again, we do have the A10 up above around 76. That kind of matches closely to our upper edge there, right? So we'll see if that offers if we get a bounce up to the 76 area, 75 for a short, to kind of keep it within these parameters here. Yeah, we're in the lower quartile of the sandbox. Again, that sandbox is flexible, right? I mean, it's just a rough outline. They're not lines in the sand, hard lines in the sand, but they're just references. So yeah, we're at the lower edge. So now in the middle here of this, zone, uh, we typically don't have a like a good edge, trade edge. I mean, we're still monitoring it in terms of, uh, looking for one, but right now we still have this downward lean, and that hasn't changed. So we can still sell, what we call premiums, right? Above the 89s here, pops. So looking for a pop and then a drop. So that's kind of the core lean right now. Core lean is to sell the pops. Sell the pops, buy the drops. Yeah, Brent oil is at $100, or hits $100 anyways. West Texas here at 91. So clearly the escalation. Yeah, it looks like we may need to wait for the next time zone to see if there's any core reaction. This is pretty muddied down here. Yeah, knife fight in the phone booth. Yeah, when you get to these tight areas there. All right, so I'm just in what we referred to as the observation mode. Just watching here. I don't have an active trade on at this stage, so we're just going to be patient and see. Again, I'm kind of planning out potentially a peekaboo long on a dip, right? I either look below and fail type of trade. Planning out that if it unfolds, right? Also to the upside, if the upside moves up first a bit, looking for an A10 short. That's the upper edge of the sandbox. That's kind of what I'm looking for right now. Just planning out potential trade opportunities. Right in the middle here, we don't have anything. Anybody Super Mario scalpers in here? This is the type of action, if you're more of a scalper, fast type of scalper, um, to play these tight ranges. Again, that low is down to the 45s. But again, I'm pretty confident we're going to get a test there. The bulls are not really reversing anything, and the sellers keep reloading. We do have the initial balance, first hourly high low on deck, and again that leads us into the 10:35 45 window. Take a look at the 5-minute chart, just noticing lots of wicks on the 5-minute over here. Let's zoom in a little bit. All right. And this really kind of leads me to say, that the sellers continue to reload. All right. Look at all the wicks in here. Everybody see the wicks? Wickety wicks. They're wickety wicks. All right. So every time the buyer is trying to pop it up, sellers just kind of play whack-a-mole and smash it right back down. So the bulls are gonna have to overcome, those wicks at some point if they have any chance they want to move it higher. Well, yeah, in regards to the Dom image yesterday that I posted, that was right into the earnings, of Google or Tesla, whichever came out first. I think it was Google, and yeah, everybody just pulls, their bids, their offerings. But even still, if you take a look, here's the Dom, here's my Dom, right? But even still, look at I mean, I remember the days, and some of you may as well. I remember the days where the inside bid, the depth was 4 deep, four 4 prices deep. In other words, 4 width. 1,000, 2,000, right? Now you're getting 13, 25. You know, and then when the earnings comes up or something happens, it goes down to single digits. So we only have 2 digits. But I remember when there was 4 digits. And the market would just like, I mean, it would be so thick trading. Then it went to kind of three-ish, right? Now it's down to two, and then even at one when crazy things happen, right? So the liquidity, you know, remember, the DOMs here, these are only indications, of, I mean, they're orders, but they're not trades. So these things change, rapidly. So I don't really pay attention to them. I mean, I have it on the screen over here because I do use the DOM, but I don't really pay attention to the sizes on there because they're fugazi, right? They're worthless, to take a look at, to try to, oh, let's see what the depth of market is and what's the, oh, there's a big buyer, there's a big seller at a particular level. They can be gone in a nanosecond. Okay, so I don't really pay attention to them. All right, well, we have our initial balance, first hourly high low now in place. All right, let me just this is, all right, so the initial balance high low is in place, and the initial balance is 45s through 86s. But again, I still think the market is, still in liquidation, long liquidation mode, and this is perhaps just a temporary area for, prices to consolidate a bit. All right. And again, the core, after the first 30 minutes, the core is the bulls need to recapture at minimum, right? 65s at minimum. So until then, the pressure is on. All right. Well, right now, again, just as a review, I don't have a dog in the fight at the moment, so we're just gonna. I'm still in the patient mode at this stage. All right, we got a big defensive move here by the Bulls, huh? They don't want it below those 45s. Kick save. Yeah, hold on a second, Steve. Kick save. All right, we still have a zone up around the, between 70, 75s up there. All right, and if they try to make an attempt to move higher, let's see if there's a failure up in those areas. And I don't think it's ready to break out, certainly, but again, they've been wicking that every time they get up into that area. But we'll see this time. Trying to make an attempt there. The Russell is strong. Really, you would think that as rates move higher, the small caps get hammered. All right, guys, I'll be passing the baton over to Bo at 11 a.m. I have a meeting scheduled, so I'll pass that baton over to him at 11. He's gonna jump on with you for about an hour or so. So stick around, stay tuned. I know many of you like Bo's relaxing analysis. He does a very good job, so stick around. All right, let's see if we punch through those lows. Are they still? How many shots on goal can they have with continued kick saves? Look at that, right up to the 65s, as I mentioned. Again, the Bulls, that's what I'm saying. The Bulls, at minimum, have to get up through 65s. And right up there in whack-a-mole. AR7 is 63 to 50. Okay, cool. Yeah, that matches. All right, they keep testing this 45. Let's see if they break that lower. All right, there they go. They're pushing it down. Again, still looking for this area if possible. If we get down in these areas. Now, of course, to play one of the ways to play this is on a reclaim, right? Wait for a pivot to be put in, and then a reclaim. A lot of folks like doing that. Let the market push lower, clear out stops, right, and then play the reclaim. Yeah, reclaim right side pivot rule. Sure. Extend this out a little bit. When we get into inflection areas, I like to look at the. I do like to look at the order flow. I don't look at it all day, but when we get into certain areas, I do like to look at the order flow. All right, guys, I'm going to be passing the baton over to Bo, and I appreciate all your input here today. Hopefully, it helped to some degree, and we'll get Bo set up on audio and visual, so he will continue on probably for another hour or so. I'll leave that in his capable hands. All right, so thanks again, everybody. Enjoy the rest of your day. Trade well, manage risk, and let's have a continued rest of your good day. Appreciate that all. All right, so let me stop the stream here on my end, and we'll pass it over to Bo.
Hey, guys. Thanks, David. Good morning, everyone. Hope you're all doing great. I didn't have the chance to listen to David as I was in my own room and doing my thing. But so hopefully I won't be kind of repeating, or maybe it's good if I'm repeating something he might have been saying too, but I've been talking for a few days now about how bond markets have been moving pretty hard, and at what point does the rest of the market or the rest of the world start to think this is meaningful? And the thing to know and understand about how some of these trend changes work is that oftentimes when it's not, it's the frustration of people like me that were, kept talking about it. Well, bonds are a problem. Bonds are a problem. Bonds are a problem. When the market holds up well to that, it can be a really frustrating situation for a trader because price is not confirming what you really think in your brain it should do based on something else, right? But oftentimes where you see it start to matter is where there's 2 or 3 or 4 or 5 other things that start coming out at the same time. Earnings, I don't really know. I'm not much of a fundamental guy, so I'm not good about knowing how earnings might have affected the selling, in conjunction. But if you look at the bond markets and then you look at some bad earnings or some bad reaction to earnings, it could have been good earnings, but they sold the news, right? And then you look at, crude taking another big leg higher, you start to feel like, something has to give here. And I've been highlighting similarly in my room for the last few days, that there was a big disconnect between the NQ and its 50-day moving average and the ES and its 50-day moving average, right? So what I was saying was NQ traded well below its 50-day, and the ES was still holding above it over the last several days. And so finally, I said, look, if we get some rallying out of the NQ, it really needs to print and test that 50-day. And yes, YM probably as well, right? And so what do you want to see? You want to see, this is what I was saying the last few days, was you want to see NQ test that 50-day, which I kept saying I think it will, because these big moving averages have a tendency that price gravitates towards them. But when it breaks them, it also doesn't typically just break them and then not check back to it, right? So my anticipation was for the NQ to test that 50-day. And then I wasn't saying for sure the market's going to sell off here. I just said, now we want to wait and see, does it reclaim that and cause some buyers to come in, or does it reject it and start going down again? And what I was trying to point out was, if it does reject it, I have a hard time thinking that the ES is going to hold its 50-day, right? So we've got a little bit of, downside confirmation across the board on this stuff. And it's already moved quite a bit in terms of the NQ. So it's still a tricky trade, because the buyers can come in and support this at any time. And even though the bond markets have moved a lot, there could also be profit taking ahead of the Fed meeting next week in the bond market. So if the bonds have sort of started to break out, and they're trying to break out, but they still need to clear this big level from January of 2025. And I think what's happening is they're kind of making the decision for the Fed, right? They're saying, look, Warsh came out with all this hawkish speech that price stability, price stability, price stability, but they didn't do anything in the last meeting. So now the bond markets are telling them, look, you didn't do anything in the last meeting, so we're going to force your hand, and you're going to be behind the 8 ball here, and you're going to absolutely have to hike rates in the July meeting. So, and again, whether they do or not, we'll have to wait and see. But when you start to see the second, third, fourth domino, fall, that's when you start to worry, because everybody's piled into these same trades. And, the concentration has been talked about for years, and it basically, it can create this void and this pocket and vacuum where, if things get nasty here, they can get nasty quickly. And, when you break those 50-day moving averages, and you don't get the reclaim that everyone always hopes for, what's the big one that they target? It's the 200-day. Where does the 200-day come in? It comes in all the way back down into that, April, May ridiculous, long side trade that happened that never really got retested that well. So, if you start to have ATRs on the rise again, an expanding volatility, and you start to see, 150 point days in the ES again, and 1,000 or 1,200 point days in the NQ again, like, it could get there very quickly. Like we could gravitate down towards the 200-day moving averages, just in time for the Fed meeting next week. Now, those are big moves. So does that really happen? And does it happen that quickly? Probably not, because things tend to not really go in that much of a straight line. But what if we just get the hike that we expect? What if bonds continue to sell off going into next week, and then we get the hike that we expect? But what if it's not the hike that we expect? What if they hike a half a point, and everyone expects a quarter? Or, back in the old days, you didn't have all of this Fed forecasting all the time. And occasionally you'd get a surprise, a surprise rate adjustment in between meetings where the market had no idea that was coming. And then it has to, reprice everything quickly and stuff. So I guess the point to all of that I'm making is when these inflection points occur, you want to be careful staying with your same concept of that you can always just buy the dip and be safe and everything. Like, I mean, yeah, you maybe you can, but whatever you do, you want to wait for your signal to manifest itself instead of trying to buy these, catch these falling knives, because the lower it goes, the more selling they need to do. The more selling they need to do, the lower, they can be a perpetual cycle in trending markets where, if there's no buyers, this thing's not going higher. They might be able to manufacture a little short covering pop here and there, but typically they're going to sell into that because people that have been trying to be long this are hoping to get out at a better price. They're seeing continued weakness across the board. Now they're seeing crude oil going back out through its high. It can get kind of nasty here if it wants to. The other hand, what I've talked about a lot over the time that I've been doing the presentations here in the pit and stuff is I use these ATR boxes, these yellow boxes, to represent what the current 5-day ATR range is. And sometimes, or oftentimes, when you see in the overnight action that we get a full 5-day ATR move, either it can expand out and do a 2 or 3 times, we can have a day where it's like, yep, everything's broken, it goes way out on you. Or you can also sometimes come in and have an RTH session where there's just all of the energy has been used up, and you can go into like a balanced mode throughout the course of the RTH, where you sometimes can get some pretty good range bound, and what I like to think of as expanding range bound price action, where you can measure the move. So what I'm looking at right now is where the opening price was, how far it rallied, and then measure that same move in the opposite direction. And that's sometimes where you get your buyers coming in is on the mirrored side of that. So, and then, because what happens right here, if we rally again and go back up through the open, is that going to generate like a massive short squeeze? Not in my opinion, but we could easily get back up into this opening range, and we could have our range be put in for the day. And you know. And the reason you start wondering about that is because, look, you know, this has now moved a lot. So do you want to actually be shorting these you know, these levels down here? At what point do you think that the risk reward is overdone and it's just not worth it to be involved in the trade, right? Um, it could easily go a lot lower, but you could easily be shorting right here into the hole, as Danny likes to say. Don't, you know, you got to be careful shorting in the hole, because as soon as you do, they can rip them, you know, 30 points or whatever on one little news blip out of the White House. So just looking at some of the other charts, you've got, here's the ES. You can see here, I took my ATR box, I just adjusted it to the overnight high of the day. And so you can see right before the open, we had already gotten through it. You can also use this to kind of adjust, like let's say they ignore all the overnight price action and maybe they just figure this is a big gap and go. And if you align the upper side of the box to the regular session high, then you could say, look, we've undercut all of these lows here, and we still have a big level down here, which should be support. And frankly, the market needs to go test that support, right? So if the RTH session high is in, if we put in an ATR move from there, 5-day ATR move from there, we should test 74.06, right? So those are kind of some of the ways you can use ATRs and use numbers and levels. So let's say we're targeting 74.06, you've got 20 points, right, of downside, maybe at least, right? Maybe you'd say, oh, it should easily go through the big figure at 7,400. But if you have 20 points of downside, but this thing reverses and retakes, you know, the opening print, you know, where does your risk reward have to be? Do you want to short with a stop above 45, you know, and a target down at 25? Like, I don't like that kind of risk reward, right? So I wouldn't be taking that trade. If this thing can come back up in here and retest now the RTH lows, then maybe that's worth a shot with a 10-point stop or something like that, because then if it rejects, you might get 50 or 60 points out of it. So you're just doing quick risk reward analyses so that you're constantly thinking through your trades and making sure you're not getting too emotional in terms of where you want to get in. Like, you really want to be, at least for me, when I'm very precise and patient and confident with where I want to enter, and then what my risk level is and where that trade fails, you know, surprise, surprise, well, that's when I trade my best, right? And that's because I'm planning out the trade, not letting the trade, you know, sort of control me, right? So for now, I'm just going to leave this up here. Let's look again. Let's keep looking at these charts. We've got the NQ. Same thing, right? And last night, you know, that was an interesting, I was talking about this in my room this morning. Last night was an interesting little buy program, right? Because we had a gap down in the Globex, which was based on earnings, I guess. And then the market didn't fill that gap right away. It pushed lower, but then when it reversed, they went into a pretty good buying spree there where it just really marched straight up. And the fact that it completely reversed that and came back down into this range, like when I went to bed last night, I was totally thinking, boy, this is starting to maybe be meaningful. And if the markets finally start to turn, maybe this is the time I should be shorting the overnight. Well, of course, I didn't short the overnight. So, then you come in and you have to be pretty quick to catch that good short up there off that first rally. And that was a tricky one to catch, because what have they been doing all along on these big gaps lower? They've been buying the shit out of them, right? So it's hard sometimes to then switch your mindset over and short that initial pop, when every time in the past 2 years or whatever it's been, like, it feels like, you try to go and short that initial pop and you get friggin' run over. So I guess, yeah, the point I'm trying to make is that when these shifts occur, you do have to be a little careful about your mindset, and being too stubborn about things. And even for me, like the last 3 days, I've been pretty stubborn, and also like trading well around that. Like I've been talking about how, hey, if you have a premise behind your trade that bond yields are really moving a lot to the upside, and that should be an effect on the market, so I should be short, that's fine. But when the trade isn't acting right, you got to be skeptical of it. And so sometimes what the market manipulators are doing is they're getting out ahead of, they're helping support the market so that they can get out of positions. And then once the shorts have finally covered, then there's no more buyers left to support the market, right? So it sometimes can take a day or two. You can see that play out in Fed meetings as well, where sometimes they make the announcement, or you hear the press conference, and they're saying things that you're like, oh man, the market should absolutely love this or absolutely hate this or whatever, and it doesn't until then, maybe the next day, right? It's like they prop it, or they sell them to buy them, or they buy them to sell them, or whatever, right? You don't know how it's going to go until it goes, right? It's always easy to figure this stuff out after the fact. When you look at the charts after the fact, it's just like, oh, I should have sold there. Oh, I should have bought there. When you're in a good flow with the market, that's sort of what you want to be doing, but just using your stops, defining your risk, having a really good idea of where the big levels are that you think are maybe the most meaningful. And then how does price react at those levels? Is it support? Because it's only really support if the buyers come in, right? If the buyers don't come in and they knife right through it, it's not support. It now becomes resistance. Okay, so that was sort of a big long breath. Take a moment here. Do you guys have any questions? Want to discuss anything in particular this morning? I'm still flat. I put a couple contracts on short up here in the 80 and the 74 area. And for me, that was the level that I was watching closely. It was 73s and that monthly pivot. So for my trading, I normally trade off the 1 minute chart as my main time frame. So that's right here. And I use the higher 15-minute time frames as my higher time frame, and occasionally I'll do like a 15-minute doji entry. You guys have heard me talk about before. So, and the biases come from, you know, being just aligned with the daily. So the point of that is to say, if we're below the opening print, then I'm just assuming the market's trying to put in a red candle. And if we're above it, I'm assuming the market's trying to put in a green candle. And so you want to be aligned, in my opinion here, still to the short side. That was a pretty good spot to try to get in, you know, again, in retrospect. But I would have rather tried to get in on a retest of the open. So we'll see, you know, now, does it give you another chance? Was this a sort of an exhaustive sell point because they printed some volume there, swept some stops? Now do they come back up like this and rip it? And again, it doesn't have to rip hard, but it could easily just go back to the open. That would be a pretty good win, really, at this point, I would say. But when we're looking at what I was talking about, an expanding range, so we went, say, 54 to 86, it's 32 points. 54, what was the low we just put in? 54 to 20, 34 points, right? So you've got now your expanding range scenario, and, you know, probably there's volume profile. Yep, you can look at your volume profile. People will say, yep, here's all your volume right here. So you should expect price to move back up into that range. It just might take a news announcement or something today. You know, they could still expand this quite a lot lower if they just want to keep reducing their exposure. Honestly, a glance across at the big board, there's a lot of big red, but there's some green as well. And, you know, green in the energies you'd expect. There's some green in health. There's some green in technology even. So, you know, maybe it doesn't get as hairball as it could. I don't know. We'll have to wait and see, right? This here, what you're looking at is the trader platform, Niels's platform. So if you have any questions about that, I can talk about that. Talk about any of my personal setups. Like I said, I'm flat here. I actually traded a little bit last night and caught some of that upside move. And then I made, you know, an okay trade with shorting that initial pop. But of course, I tightened my stop and got stopped out. And so now, you know, I'm like, I've been talking through some of these things about this little retest of the open was the one that now in retrospect looks beautiful, right? Because we had a little short covering rally right there. It almost hit that 15-minute moving average again. It rejected, pulled back down through the open, and then when it retested the open, look at that. You would have, if you had gotten that trade, you wouldn't have taken any heat on it at all. And now it's, you know, 30 points your favor. So but 28,475, let's see on the level sheets if there's anything there. We have our prior week's low at 28,408. So do you think that gets tested today? Very well could and probably should. 28, 372.5 is the S3 level, right? Oftentimes it takes a lot of energy to test the S3 level on your daily pivots. So if it does get down to that point, you know, that might be a really good rejection point where you see, you know, where you see some good buying coming in. On the ES side, we've got 74.17 is your S3 level. Yeah, so we're almost there. And a quick glance across, you've got bonds possibly stabilizing here and going bid. So again, if you're evaluating right here, your risk reward, you know, you have to be saying to yourself, yeah, could it go down to 7,400, or could it break and go down to 7,350 or whatever? Yes, it can. But it's already, you know, we've used a lot of energy here in a summertime trade, and you know, it could be overdone. So I personally, if you're looking to be short in and around these levels, you just want to use a tight stop. I don't care if you get immediately stopped out on noise. You have to be careful, because you know, you can put your stop 20 points higher and you'll get stopped out on the noise. When Trump, you know, tweets something about whatever, and you know that that's coming because they're watching these markets and they're worried about them. Yeah, man, Philly D. I've been climbing a lot lately. I've done a couple more big days up on Pikes Peak, and I'm now starting to help my buddy, who's my good climbing partner. He's remodeling his house, so in about 30 minutes when I'm done here, I think I'm just going to shut it down for the day and keep my green, and go help him with his remodel. How about you? How have you been doing, Philly? Is it hot there in New York right now? It's been around 90, 95 here lately, which that's pretty hot for us. But as they say, it's not, it's a dry heat, right? So it seems a little, little easier to take than like being in Chicago or something. I've not ever really spent any time in New York, so that's on my list for sure to do. All right, so we're breaking again. We broke that 17 level. I think that would be a decent spot. If it can reclaim that, that might be a decent spot to try on the long reversal. But one of the problems is now you're seeing some RTY and YM sort of joining the party here to the downside. And so if it becomes kind of a margin selling thing, you could, you know, but look, we did just get a minus 1300 downtick print. Oftentimes that's a really good spot to get out of a short. I might just try one long here, just see if I can get one on those downticks. So it went minus 1300. They're back to minus 600 now on the ticks. And the problem is, look at crude. It just still wants to go. Like it's acting like 93 is imminent. But it's had a hell of a run, crude has. And, you know, again, like do you really want to be buying crude right here at 93, 92 and a half? I mean, you can if you want, but risk reward wise, again, it's just something to evaluate, right? Like when it was at 68, I was sort of jumping up and down about don't be short crude at 68. Just from a risk reward perspective, I was just trying to outline how you want to really be disciplined in those scenarios when it comes down to how much has something moved and how much more movement should you actually expect out of it. If we put in a expanding range kind of RTH session, which I was talking about earlier, then what happens is they can come in here with their buy programs and they expand the range out, usually by 5 or 10 points. So they would take out the 84s and maybe get it to print back up to yesterday's low, or I can't remember where yesterday's low was. Yeah, 75.04. And look at where the 50-day comes in, 75.06, right? So anyone who is buying the 50-day in the ES, right now they're just hoping that it goes back and rechecks that level, which usually it does. But the way that resistance can work is if it gets back up near that low or near that level, they can reject them ahead of it and start selling them ahead of it, because this is just, it's weak price action, and they want to be careful about if they can make themselves whole again, they will, right? And now on the NQ, the 50-day moving average comes in 392. So that would be, a really, really pretty hard reversal here today if that were to happen. I don't expect that it would. But what I'm saying is they can turn this into now a really confusing, wide range, expansive range bound day where you're like, oh, I should be, shorting the rally, right? But then instead of it rejecting, it just goes ripping right through you. So again, nothing wrong with being a buyer here if you get the proper signal. So what I want to see, because I'm trading off the 1 minute, is I want to see this continued upside price action, which the more it prints higher, the more this 1 minute moving average turns and starts sloping to the upside. And then especially on the reversals, it's the first pullback that you get. If it's a true reversal, that's usually the very best risk reward trade you can put on, because you've got the positioning is completed, right? The sellers have finished their sell programs. There's no one left to sell. And so all the shorts start to covering, and then the new buyers start coming in looking for price to move up, right? So when I'm looking at my signals, I could have been shorting here at the 22s because this is a downsloping moving average, and we're below the open. But once we have a complete bar that closes and completes above this moving average, it's like a little warning flag for me that, hey, this thing could be over. And what the shorts start doing is they start looking at that as a failed signal, possibly moving over crossover. Yep. And then they start putting their buy stops in right above that level, right? Yeah, nice, Delph. I think if you caught it, you know, you don't want to be too greedy about it, because they could just reject this here and go right back down to your entry point. But it's a nice catch, right? It's hard to do in real time, watching a whole bunch of different things. But the tick readings and the extreme tick readings are a pretty good thing to use. We used to use it a lot more back in the day, when we would get actually 1,500 up or down ticks, and it had I was using eSignal at the time, and it had a cool little bell that would ring as like an alert notification anytime we had 1,500 up or down ticks. And we wouldn't even worry about it. We would just say, yeah, if you hear that bell, you just cover. Not necessarily your whole position, but if you had a runner, maybe you'd cover it. Or if you had some size and you wanted to cover some, you just figure, you know, if that's an extreme reading, I'm going to at least take one off, take two off, whatever the case. And so now the question will be, like I said, do they hold? I mean, here's RTY and YM holding the open again and moving right back up into these ranges, right? So, you know, that's kind of what my expectation is to see this thing. If you got that long, you could easily and quickly run these stops right back to the open. And frankly, for me, I love to see a test of the open here. And that would be the spot that I would want to short, because the opening price principle is basically saying that if the big institutions come in with orders to execute at the opening price, then oftentimes when price gets back to that level, they have more to execute at that price, because they usually don't get their orders all filled and completed, right? So if they had sell orders, you know, at some point, the reason that the market starts lifting is because the sell orders get turned off, right? They might have, let's say they have 100,000 contracts to sell. They don't just come in with a market order. They do that with a program sell, and the parameters say sell, let's say, a third of my position, and they put a downside limit on it. And that's kind of how they execute. So they say, you know, sell it down to the 74.20s and then stop, and then wait, you know, and then they see how, if that, I mean, and I don't know how any of this stuff really works, but that's kind of my guesswork on how some of the big institutional program buys and sells work, is that, you know, now, so let's say they stopped their sell program, but let's say they still have more exposure they want to take off the table. If it gets back to the 53s, there should be a seller that comes back in at that level, right? That's the premise. Now, the flip side is, we bought it pretty well off the open, right? So there could be a lot of players out there that are hoping for the market to reclaim the open, and then they'll turn their buy programs back on, and they look for that, you know, move all the way back up into yesterday's low or yesterday's range. We just have to wait and see, right? But this is now a true, you know, buyers came in, they've put in a nice little uptrend here. The 1 minute moving average has rotated and started sloping to the upside. And so anybody who's short is hoping the market comes back down into this zone in order to cover their shorts. right? Because they're looking at this from a technical perspective and saying, yep, the downtrend has been broken. It hasn't actually. And if you look at the bigger downtrend, right? But on this shorter time frame, it certainly was broken, right? It was broken, right? I mean, technically even there, but especially once it broke that 23 level. And then look at what happens. The 23 level here, before it was support, it broke, came back up a little bit, broke again, and then look at this, the high of this bar corresponds perfectly to the low of that bar, which corresponds perfectly to the low of this bar. So that support became resistance, broke again, became support, and now we really don't want to see it break that level again. But if you were short, you know, it just rallied 25 points in 10 minutes. You're really hoping that the buying is done and it comes back in here so you can buy it again, right? So if we put in a little sort of inverse head and shoulders bottom here, you would expect to see the 20 level get tested again, or ideally, what I like the most is when the head and shoulders, when the right shoulder is higher than the left shoulder, right? Because it signifies that, oh, it couldn't get back down there, and now the buyers are really coming in, right? So you could try a long right here at this retest of the moving average. They could easily just sweep it through and go right back into sell mode. But a quick glance across says, look, the bond markets have actually started to go a little bit bid here today, which is good. I want to see this stuff stabilize. I'm not just sitting over here talking doom and gloom like I want everybody to get crushed and we go into this. But, you know, I also do think that a stagflationary environment is sort of what we're looking at right now. So I don't know. I mean, what can the White House or anyone else do to help stabilize the bond markets and, you know, maybe start the next recovery in the housing market other than hike rates? And if they hike rates and we're already kind of soft and possibly on the verge of a recession, then they're hiking rates into a recession, and it could get like pretty gnarly before it actually turns back into like the next leg of a raging bull market. Now, on the other hand, there's so much cash out there and so much cash around the world that's been chasing yield that these moves are just astounding to me, how much they just tend to rotate and they rotate and they rotate. And so even on a day like this, you feel like, wow, there's pretty good selling pressure. And you look at the big board and there's a bunch of green on it, right? Where like in the old days, you come in and have a day like this and the whole S&P 500 would be red across the board. And we'd be like minus 2,000 or minus 2,200 on the advanced declines. You know, like, do you remember those kinds of days? I do. Doesn't seem like we've had them in quite a long time, you know, because it seems like every time they're selling something off, they're needing to rotate that money into something else. So we got the close of our 15-minute candle, finally a green candle. It's a little bit, looks like a 2-bar reversal kind of with a lower a lower low, however, so that becomes tricky. But you are seeing some potential reversal here in the crude market. So look, 25s, often the 25s hold. Did we get them to hold the 25s here? Maybe I'll try it. 25 and a quarter, okay. Got a 4-point stop. Just put on a 1 lot. There's a better chance that it just sweeps me lower. So I'm just, as soon as it moves my way, I put my stop break even and just see if I get lucky. Okay, no, I didn't get lucky. What I'm trying to do sometimes when I'm putting quick trades on like that, especially with a 1 lot, is I'm trying to get a feel for what that price action feels like, right? As soon as I put it on, it immediately went my way. The fact that it came back to my entry point, stopped me out, they still could be a little weary here. But look, you've got NVIDIA's going bid. So if we can get NVIDIA to rip back up through, say, 209, then there's a good chance we'll see the market back up at its opening print. But if this becomes a perfect head and shoulders, it would test the 20 level. If it becomes an imperfect one, which I really love the most, this is the low that should hold, right? So it's like 23 and a half becomes a level that it seems silly. Like it seems like that's a no-brainer. They're going to run the stops below 23 and a half. But if they don't, it's a beautiful entry point, right? And so you can, if you want, you can try using like bigger size with a really tight stop. And you kind of like, you go like, oh, well, a 2-point stop, that's ridiculous, right? And it kind of is. But when it works, it's telling you something. It's telling you that the price action has really flipped and the sellers are gone and now they're going to rip this thing higher. If you want, you can also do it as like, look for the false breakdown here. You can buy them at right at the 23 and a half level, and it might go through you by like a couple ticks, but it should like just capture all those sell stops and then face rip them. That's the action I'd be looking for if I'm trying to anticipate this reversal type trade. And again, what we're talking about a lot of times on this stuff is anticipating where the puck is going to go to, right? Like if you like hockey as an analogy, I grew up playing hockey and I love watching hockey. So it's a good one to think about because it's just a matter of, the anticipation is where you want to be, even more so thinking about your exits. Okay. So your entry, at least in my world, my entry is often really good if I'm being really specific to that level. Like I could just buy it here with a stop at 23, right? But my thesis right here is if I buy it at 23 and a half and it makes a little false breakdown, then you want to see that it really shouldn't trade below, say, 19. Okay, so you don't have to necessarily have your stop way below the low and risk all that extra amount. You can have it, you can try entries that are really precise. And you know, if you're wanting to be short right here, you can try selling the retest of this high of this bar at 29 and 3/4, thinking that it should then go back down and sweep the liquidity below the 23, right? So you're looking for kind of like a little failed breakout to the upside. You know, the problem is, I don't know if you're going to get that with NVIDIA acting a little bit like it's got some legs here. But if NVIDIA rejects really hard and starts moving back down, this could just be, you know, your little rally in a bear market type of day, and then this is the reversal trade where, you know, if you wanted, you really need to be thoughtful that above the 38s, they could really rip it hard, right? So I'm not necessarily in no man's land right here. But usually when you get a true reversal like this, the best long entry occurs much closer to the low. But when it does hold a level like this and move higher, it can go really hard because everyone's waiting for that last gasp for it to come down so they can cover their shorts. And when it starts going the other way, they just hit the buy market button and they take the upside liquidity. Let's flip back over to here for a second. So now if you get this false breakout, you don't really want it coming back into this range. So for me, if I'm long already, I would want to, instead of having my stop all the way down here, I would rather move my stop up into this, below this candle. This now becomes my controlling bar for the buyers. You know, they've stepped in, they've taken out this level, they've put in a higher low. All they have to do is convert these 38s to make this look like this nice head and shoulders, inverse head and shoulders reversal that I'm talking about. And so to me, if we violate the low of this bar at 29, we're also likely to violate the 23s, right? And so that's a different way to look at how you can look at and evaluate your entry points as well. Because if my thought is that this should retest the open, I don't necessarily want to be shorting into the strength, right? But I don't mind shorting into the weakness if we have, you know, a market seller that comes down and sweeps all the sell stops. So in order to keep myself out of trouble as somebody that likes to be short, you know, one way to do that is to say, okay, I'm only going to be short below the 29s. So if it keeps ripping, face ripping to the upside, you know, at least I'm not shorting into it. And then if it collapses, you could say, look, usually when it fails and it goes down into this range, usually if it goes to the middle of the range, it targets the other side of the range. So if it goes hard, if they just sweep a bunch, actually what I kind of want to do is make this just a 2-point stop. Again, it sounds ridiculous, but what I want to do is add to a winner. If it actually rejects here and sweeps lower, then where do I want to start buying them? 23s, right? So I can toggle this off. So if a market seller comes in and takes out all this liquidity, I'll be short 3, and I would just, you know, go ahead and start bidding. Let's call it 19 instead. Okay. And then I can just sit here and watch, and it doesn't even matter. Whatever happens, happens. You know, ideally, I think I'd rather do like a 3 lot. Maybe give it some room. And do that 3 lot at the open. If it can get back to the open, $53.5. I mean, I kind of like the precision of it. Just do it 1 tick below the open. I mean, 53.25 on 3. If I get filled, it'll put my stop 10 points above. 53.25 to 63.25. What I would want to see happen is for the sellers to come right in off of that 53 level and give me a +3 and a +6, right? So I'd be bidding 50 and I'd be bidding 47. And then if you're lucky, that's the rejection point. And then you have a runner that maybe targets down to the 7,400 level or down into a 73 handle. So you could similarly do the same thing with your short stop entries, and you could have it higher up here. Like now this is the controlling bar in my opinion, right? So if it breaks the 33s, you could have a, you know, consider an entry there. But from my 1 minute perspective, technically speaking, in order for this 1 minute moving average to start sloping down again, price needs to sweep. Okay, if it doesn't sweep, this is going to continue to be an upsloping moving average, which indicates being on a long buy signal for me, for my system. Okay, now when I'm putting together the offer at 53.25, it's partly because you have a confluence here of this bigger 15-minute moving average that is also down sloping and now is coming in right below that, right? But you can see what I'm saying is that I'm still biased towards the short side because that's how my system tells me to trade. And that doesn't mean that it's not a good thing to be long. It's just where I really wanted to be long, I missed it, right? And I didn't get aggressive enough and just pay up for it. And where I tried my little one lot actually was a good spot, but I was being too scared of a losing trade and taking a loss. And so I didn't really commit to that. You know, it was sort of like an impulsive entry instead of something that I really thought through. Where is the level I want to try? It lined up so well that I should have really seen it. But that's okay. I mean, that's the way trading goes sometimes. It's hard to always be fearless all the time, right? Now, if we're looking back at the sheets, okay, NQ is approaching this previous low was 652.5. Doesn't coordinate to a whole lot on my sheets. So it makes it tricky sometimes, right? But 718.25 as the open. You know, you're still below last week's close. That S2 level, I mean, that S2 level really should print, I think. And sometimes when they reclaim like this, look at YM. Dad really used to love that when they would do a lower low like this and then catch everybody. Doesn't happen all that much though, is the problem. Like when it makes a lower low like this, technically speaking, until it comes up here and, you know, takes out probably these levels, this is a downtrend indication that the downside could still expand. Once it really, you know, I mean, the problem is it's now trying to complete this bar above the moving average, and it could go up through, and then this whole thing becomes a big reversal. See how, you know, see how it happens over here. I mean, this is a good bounce, right? This is an easier place to try shorting, because at least now you've got 28, you know, 30 handles back to the downside that they can, because if they start selling again, they turn on a sell program again, they know that they can sell all the way down through this level without even breaking the lows. What they don't want to do is come in with their big market order and just completely collapse the market, right? That's why you have these different gyrations that occur sometimes, is because, again, like they just turn it to a pause mode, or they start buying some in order to sell more, or, you know, however they do it. And watch and see what happens here with crude. See how crude came back down, tested this moving average perfectly, and now has gone bid again. You know, that could set up just the next explosive move to the upside in crude. And, you know, you could just get a really hard rejection here in the Qs. So you know, maybe this is where you'd want to sell one. Oh, selling 3, I guess. 38.25, 35.25, 32.25. Sorry, I don't know why it's doing this like double noise thing on me. See how crude is trying to continue to rip, so they could, you know, I should be able to get a few points on this if this is actually going to be a reversal. But instead, maybe I was being too emotional, not thinking through my trade and letting my trade come to me and waiting for it. I want to see if there's anything in the ticks that give me a good indication here. Now that it's moved against me some, I want to be careful, right? It could easily rip right through. So if it starts coming back my way, I got to be ready to buy some, because it's like, oh shit, I could have just fucking shorted a stupid level, you know, and it just keeps going. So I might fade this even still. Or I might just say, look, I better start covering them. Oh boy. I think I might add to this and see if it drops again. Okay, I put one more on, but probably not the right thing to do. I mean, look, I'm giving back all my profit now. Getting 700 upticks. So that's pretty good. Why did I do that, you guys? Why? So I need to see this 43 level break, and then can it sweep? It's acting like it now wants to just stay firm, but sometimes they reject it really hard off of this bigger moving average here. So okay, we'll see. Grr. Just taking some off, kind of, to try and get myself back to a little break even there, right? Like I wasn't patient enough. It kind of came to a really good spot for me, but I didn't wait long enough, and then looks like it still wants higher, but look at bonds. Bonds have now turned back to the sell side. So if this starts going lower again, we've set it up really well for a big sweeper back to the downside. But it's acting pretty well, like it's going to keep ripping me. I don't know, I might just... And then here I am, I'm trading longer than I wanted to, right? I only wanted to be in here for like an hour and then just be done. Look, RTY and YM are really looking good now. Everything's looking better now, right? except for the bonds, which are starting to turn. Damn it. Can't even recognize my charts now. I've got all this crap all over them. So now we just have to see if the opening print means anything in terms of resistance. I mean, they already got through and ran some stops, but the NQ couldn't. So watch and see if the NQ rejects without even getting to the opening print, or if now the NQ starts to go on through. But usually it's the NQ leading it. But now we've got NVIDIA is 209.5, so this could get ugly on me if I don't cover. Advanced declines, just making another little sort of down tick. See if it can take out the low on the advanced declines. And if it means anything, if the market can follow and come back in a little bit for me or not. See what the YM looks like. Looks like I'm gonna get smoked on this one, damn it. It's gotta fail here. Apple is targeting its lows again. Maybe. If NQ rejects its open here, then I should get filled on a couple of these. So red bar there in NQ. Let's see if it can actually follow through with another red bar and retest. And it should, in theory, come back down to this bigger moving average, retest 650 or so, and the ES should retest like the 47s. That doesn't mean it will. So I'm being really fucking stubborn here. Bonds are going bid, so I think I need to get out of this. And now oil's going bid again. See if bonds start selling again, if oil rallies, and maybe I can get a couple of these back. There should be stops below the 50 level. Oftentimes they kind of target those. That would be helpful if I can get them back down below the 50s, then I'll like it, especially because took some heat on that and I've given back a lot of my profit here, so it sucks when I do that, you know. So I didn't just listen to myself. I think I should probably take a couple off. It could drop really hard. They may not have noticed crude oil yet. So if they start to notice crude oil and then they sell this thing, you know, it could easily sweep right back down into the 30s. Come on, sweep them lower, please. Whoa. No, looks like they want to take it higher. Nvidia's going bid. Fuck, that sucks. I had the chance to take it off and I didn't. Well, maybe they'll still do some selling here. Sort of wishful thinking now, but if NQ, if this turns out to be a sweeper that comes in right now, it's a, you know, they did a little false breakout of the open and now they can try to sweep the liquidity back down. May or may not. It could hold this open really and rip. Come on. There should be a lot of stops below 50. And when the algos get the read on that stuff, take another one off just out of prudence there, since it went kind of hard against me. I like the way bonds have stabilized, so that's good. So yeah, this still could have some legs. It's a little close for comfort for me to be stubborn on this. But they've also now created this big air pocket of liquidity that if they decide to sell them and take some liquidity to the downside, you have to kind of wonder where are they going to take it to, right? So that's helpful. Let's see if I can get this next one back. Come on. Come on. Yeah, I just took it off. You see how I use the columns here as, I still have 2 left, but I use the columns here as a way to buy the market, but using a limit order. So all I do, if I left click above the ask, then that puts it in basically as a limit order to buy on the ask. So without using a button to do it, I can just kind of watch. But look, see now, if you're looking to buy this here, where do you put your stop, right? You got to have your stop below this anyway. And what if it takes that out? Then, you know, you kind of open the door once they start coming back in with their sell programs, that this could be, there might not be a lot of support here now, right? We have to kind of see how it reacts. I'd love to get paid on this here, you guys, you know? I mean, I sort of am so far, but I had to take, that was stupid heat that I had to take on that trade, right? Where did I even get in on the first couple? 38s, I think. So that was just, and I wasn't even, it was almost like a bad mistake. Like I was sort of trying to short 1 and I shorted 3, and then, you know. So I want to see where this next bar can close. Where's the 15-minute? And we still have 11.5 minutes for the close of this 15-minute. It should probably test the 38s, but it may not, okay? But if it tests them and they don't hold and it gets back down into this range down here, then that could be a problem. I don't want to. I just want to decrease my exposure. You know, I hate having a good day turn into a bad, and that's almost what happened to me right there. And it was only because I was stubborn and I didn't even cover up there. Like I could have just covered above the open and really been stubborn about it. And it could have cost me a lot of money. It still can right now, right? But now we shouldn't really get back above this level at 45.5. I mean, I want to see it lower first. The advanced declines are now testing their lows. Getting some downticks. See if the 38s hold. Advanced declines just made a new low right there, you guys. So all I want to do now is try to manage this one lot. Okay, I'm back on a short sell signal. So I should be looking to short little rallies up into the moving average. We've got a nice, air pocket below if they want to re-examine the low prints. Probably you're not going to see that, but it might depend on what the bond markets do. If the bond markets start selling off again, then I would be worried. Now that we've kind of got, this was the support that broke. The next support is that 38 level that held. It was perfect. Look how perfectly that held so far, right? I don't really want to see it getting back above the low of this bar. So that low is 42. This high is 43.25. This low is 42.75. It's like it could be a perfect spot to be trying to short again at the 46s. But I don't want to see it even get up there. I want to see the weakness really expand down lower now. And it may not, because we could get selling in crude. So I just want to have my stop right above this level. That way I'm protecting my profit. I tried a couple trades there in the room. Didn't really pan out the way I hoped. But I've got a good profit. I don't want to screw it up. If it breaks the 38s, I can always sell more right here, right? So I'm flat finally. I can always sell this break if it goes lower through the 38s. Okay, let's see what happens. Do they sweep it a little? Or do they hold it? I think they're going to hold it. But advanced declines on new lows, so maybe we do get a sweeper here. No, it's holding. Yeah, I should have just stopped for the day. Why? That was a good support level to be buying, you know? I think it's going to hold here. But if it doesn't, it could go hard still. Eh, fuck. Come on. I guess they still want to buy the dip, you guys. Buy the dip. Buy the dip. This is going to be it for me once I'm done with this trade. Grr. Oh, maybe they're going to sweep the downside still. Watching NQ closely here. Fuck. Well, here goes crude back up, trying to get back up through 92.5. Bonds are rolling over. See if they run these downside stops now. Man, hard to trade around it, you know, when it's like this. I want to see this bar close down through these levels. So then I could have my stop at 43, just above the 2 bars here. So now I'm hoping I just get lucky on this and they collapse them. Screw it. Well, that's given back a little. I was up, yeah, so I gave back about 300 bucks screwing around with all that stuff. So when you start to get out of the flow and out of the timing, you have to wonder, right? But look, crude is testing its highs again, and bonds are rolling over again. Maybe I'll try one more time on this. If it breaks down. Okay, nope, I'm done. I'm gonna go help my buddy. 28. Okay, well, not great play-by-play from me today. Hopefully I at least got you guys thinking, and maybe a bunch of you caught some of that long. I know Delph did. That was cool. And yeah, we'll check back in tomorrow. You know, we got to be, I think we just still have to be worried about the bond markets, but if they can stabilize, like I said, they could just be in this big range, and maybe ahead of the Fed, they'll come back in some, and nothing, will pan out. Like, it won't be a big deal. That's the bullishness in me. The bearishness in me tells me that this could just be getting started to the downside. But when I start to get emotional in my trading, and like you saw me doing, when I start to add to a loser, not good. That could just cost you your whole account, so just reset, turn it off, and go do something else for the day. Come back tomorrow fresh. Enjoy your afternoon and all the rest. So, all right, guys. Hope you have a great day. Good luck this afternoon. We'll check in with you tomorrow.